Hey everyone, this is Jared. I just wanted to thank you guys for showing up and kind of keeping up to date on what's going on and keeping our business going in the Lane County marketplace and all of us working together as partners to get loans to the finish line and helping your purchases moving forward. Today we have the pleasure of having a great panel here to kind of talk about different topics. But the first person we're going to talk with is we have Tom McMahon, which is the president of Cascade Title. We have Jeff Uphold with Uphold Appraisal Team. Going to talk about the appraisal market and how that's going, and then I'm going to add a little color on the lending world and also what you've heard about as forbearance and give you some resources on that. So I hope you find this information helpful. We're also recording this so we can download it and share it with people if we need to. But first up, we're going to talk with Amanda, and she's going to talk about some of the highlights once she gets her phone unmuted there and talk about some of the highlights of what's going on in the escrow world. Amanda?
Okay, yeah, so it was an interesting week last week and this week, in escrow. And I'm starting to see some really interesting things happening that I've never seen before in my escrow career. So one example was we opened an escrow, I think about 3 weeks ago. Price point was about $400,000 mark. And when we opened escrow, the buyer was pressing us from the beginning, saying she'd given her notice at her rental and she wanted us to close as quickly as possible. And just little side note, giving notice at your rental before you successfully close an escrow might be a little bit risky today. But anyway, so we're all headed towards the finish line as quick as we can. And we start the balancing process with the lender, and the lender sends us an email that the buyer is withdrawing from the transaction. So we reach out to the agent, have a conversation with the agent. Sure enough, buyer has decided that she wants to terminate and not proceed just based on, circumstances happening in the outside world. Her earnest money was $10,000. Agent said she was aware that she was going to have to give that full $10,000 over to the seller, and she had paid for an appraisal and an inspection as well. So that was pretty eye-opening to me that a buyer, after being so, wanting to get to the finish line, did a 180 and basically said, you know what, I'll pay $11,500 approximately to not buy this house. Like, that's kind of a big deal. Luckily, there was a backup offer in place. Backup offer came into play, but that we just got the termination on as well. So we're hoping to have buyer number 3 enter the picture here soon. But that's something that I think we're going to see a lot of concern with sellers on is, who is my buyer? What does my buyer do for employment? How, vested is this buyer in getting into the property? Because, we're seeing some very unusual things here. So I think those are things to think about. I've had a few transactions this week where the sellers have really gone over the top to make sure that the deal closes. We had a seller pay for some pretty expensive survey work and also work from an attorney to get some easements removed from a property because the buyer was demanding those in order to proceed to the. I don't think I would have seen the seller normally agree to do that unless the scenario presented itself, that they really want to lose out on the buyer. We're seeing a lot of pressure on transactions to close as quickly as we can. I think people are a little bit fearful that we might not get to the finish line or something might happen while we're on our way to the finish line. So although we have an anticipated close date in a contract, I'm really seeing that just about everyone is wanting to close early. So I think that's something else just to be mindful of as we're working through these, issues in transactions. I do think that sellers who have properties listed right now are extremely motivated to stay in a transaction and to perform on their end. And so that's helpful. As I touched on last week, one thing that we're finding challenging is servicing being handed off on existing loans. So when we need to order a payoff, loans are getting handed off with great frequency to a new servicer, and we have to reach out to a new servicer for a payoff. We're also finding that a lot of the payoff departments, they have staff who are working remotely, and getting payoffs is just taking a lot longer than it normally would. And so on that end, just clear communication, having your sellers get us those authorization forms as quickly as possible, inform us of any servicing transfers that they see on their end so that we can be prepared for those early closings as quickly as possible. I do think right now we've got a lot of opportunities in our market for some buyers that might not normally be getting offers accepted. So for example, your buyers that are maybe on the lower end of the spectrum that have had a ton of competition on properties, they may not have that competition right now. And I think identifying who buyers are in this market is really important. So a cool thing is we have a lot of access to information, and we kind of can see what businesses are doing well right now and what businesses are struggling and where people might be employed. So title companies do have access, and we have access to something called REI Source. We can screen through demographics or employment. So for example, someone in the health industry might be a good candidate right now. People who are in IT services might be a good candidate that have, steady employment right now. So I think if we're maybe looking at who our demographic is of buyers, who is employed right now, who would potentially be interested in purchasing their first home right now, I think that's a really good sector to kind of tap into, because we've got this beautiful kind of marketplace set up where there maybe isn't quite as much competition as there once was on the lower end homes. There's really wonderful interest rates. And so I think kind of tapping that category of buyer might be important right now. I'm hearing from a lot of my agents that they have clients who are listing properties, but they don't want to put them on the market right now. And so a lot of agents are treating those like pocket listings. And so I also think that there's a lot of opportunity right now reaching out to agents for your buyers and finding out what they might have as a pocket listing. I believe that probably people are going to want buyers to be a little bit more thoroughly vetted. I think, as I touched on earlier, I think they're going to be concerned with what do they do for work, how solid is this buyer. I've often in real estate seen letters written with offers, kind of describing who the buyer is and why they're interested in the property. I think those letters could probably be elaborated on right now as to what the buyer does, what's their source of income, maybe things like that. As a seller in the market right now, I would probably want to know that information. And I've always believed when I'm selling real estate that the pre-approvals, it's not enough for me just to get a pre-approval letter. Like, I need to know who the loan officer is and what's behind that pre-approval letter. I found in my career and working that there are different levels of pre-approval, and not all pre-approval letters are the same. So I think it's really critical who your buyer is working with and who their specific loan officer is, even within an entity. That's going to tell you a lot how the transaction is going to go, how the communication is going to go, and if we're going to successfully get to the finish line or not. I know myself, I've been spending a lot of time on Facebook lately, much more than I normally do, and I believe there's some pretty good data to support that most people are doing that. One thing that I think is really interesting is that I'll see a lot on Facebook, like signs showing that, hey, we have a pending sale, or hey, we just closed for this buyer. But what I don't see is the story behind that sale. And I think this is a moment to let your transaction shine. So when you do have someone successfully get to the finish line, I'd like to know the story behind it, not just a picture. Like, how long did they look for a home? How long were they pre-approved? What interest rate were they able to get? What's the story of these people who are successfully buying homes right now? You know, and you could keep information private. You don't have to share a picture of the home. You could share a picture of the home. But what an amazing tool and what an amazing opportunity to, you know, actually share these stories of people that are having success in the real estate market right now and give people opportunity to relate to that. The same could be true on the selling side. You know, who are these sellers that are successfully selling properties right now? What's their story? What's their motivation? Why are they selling properties right now? Were they able to get list price? Were they able to get above list price? What is it we can do to show people that real estate is still happening? And, you know, perception is a lot right now. We are dealing with a world that's changing quickly. And I think some of the changes that we're having are going to be rather permanent changes. And so I really think that if you take and embrace the change, embrace the changes that need to come, you come off looking like that much more of a professional. I think right now when I'm seeing businesses or people resist the change, I'm not seeing those businesses be as successful. So I think our perception in real estate as a whole is really, really important right now. I think we have an opportunity here in this particular area. I think a lot of people already want to live here. I think if as a state, Oregon is able to keep our numbers relatively low with regard to the COVID spread, I think that's something people are going to look at once we are to the other side of this. I'm not sure people who live in an apartment in New York are going to want to stay living in an apartment in New York. People are probably going to be looking at, hey, if something like this happens again, where do I want to live? Where is their business? Where is their opportunity to get a job? Where is their good quality of life? Where can I enjoy the outdoors, even if I'm quarantined? I really feel that that is what's going to bring our particular market right here back, more so than anything else, is real estate. And so I just really ask for everyone's help in how we're handling this and dealing with this, and conveying that Oregon is a really wonderful place to live. And so talking about safety during this virus, so one of the things that we're doing is we do have masks that our closers are wearing. We can always set someone up to sign with a mobile notary. However, I've seen very few people locally who want to sign with a mobile notary, which is interesting to me. We are conducting a lot of what I call curbside parking lot signings. And so we actually bring the documents out to be signed that don't require a notary. We collect those when they're done. We bring back out the documents to be notarized, and then we make them a full copy of everything. They don't leave their car. We wear gloves. We respect 6 feet social distancing. Questions can be answered over FaceTime or over the phone. That is the preferred method that I'm seeing most people want to sign with right now. But again, mobile notary is also a great option. And for a fee, we can always send someone right out to the client's home so that they don't even have to leave their house. Most of the mobile notaries are conducting the signings outdoors from what I've seen. They actually show up with a table, they find a location outside, and they perform the signing outside with a mask on and gloves. Okay, that's about it.
Yep. Hey, Amanda, I just wanted to highlight some of those things. So I think one of the things you talked about that's really important is the everyone working together, the buyers, the sellers, the agents, your office, lenders. I just think that's super important right now because there is kind of like this hurry up and wait, like that one person wants to go really fast to close and then they decide not to. That's becoming more common. And especially like every day that goes by, there could be another person that's unemployed, which certainly hinders the process. I am a little disappointed that this week we didn't get a video with you on roller skates going out to get a signing. I thought since we hinted at that 2 weeks ago that that would be something we'd see, but maybe that's a work hazard and Tom doesn't want to take that liability on. I get it. So thank you for your time on that, and I do agree that there's definitely a need to kind of work together. So next up we have Tom. Tom's going to talk a little bit how business has been and maybe order counts and kind of the overall market that he's seeing. Tom?
Thanks, Jared. Business has actually been pretty good, better than I expected. The refinance to sale ratio, sales have been stronger than I expected, especially like on a Monday when all the sales occur over the weekend. But overall, our order count is doing quite well. Refinances are lately have been about half of the order count, sales the other half. I think refis are trending up, but all in all, pretty pleased. Staffing is an issue because some people want to work from home because of family challenges. We have split shifts going on where some people want to work at night, others from home. But all in all, we're getting the work done in a timely manner. So I'm actually pretty pleased with how things are going. They're exceeding my expectations. People are starting to talk about foreclosures and distressed properties. I think that's a little premature. Amanda talked about people getting nervous and backing out of deals, and that boils down to people's confidence levels. And that's certainly been affected by this, but the economics of a particular investment, I don't think have really changed. You may have somebody foregoing the rent for a while, but that'll get caught up. Foreclosures, if they spike, will be quite a while from now. The lenders certainly don't want to foreclose. There's a 90-day moratorium, is my understanding, on foreclosures. So, it may spike, but not immediately. We do publish a notice of default list, if people want to subscribe to that, where you can find out what are the current foreclosures that are being initiated. When you do foreclose by trustee's sale, the first thing you record is a notice of default. So that gives you a heads up on distressed properties. The actual foreclosure itself is probably going to be at least 4 months away. But it might be.
Hey, Tom, this is Jared. You're kind of cutting in and out just a little bit. I just wanted to maybe ask a couple follow-up questions.
All right.
When we talked yesterday, you mentioned that you had, and you said it earlier, you had people working split shifts, and you had someone that's working in your title plant that's coming in at 2:00 in the morning, so they can kind of separate themselves. And I think that's, that's great that Cascade is really stepping up and doing everything they can to, keep business going. I greatly appreciate that.
Yeah. And we're doing our best to accommodate our employees and their level of safety they're entitled to. So we're happy to do it.
Sure.
Everybody's here in Eugene. We don't have to outsource stuff out of the area or out of the country. So it does allow us to be very, very flexible.
Kind of on that, I know that some other title plants and lenders, they started to outsource a lot of stuff overseas, and that's becoming a real challenge because India required to stay at home, and that's a few people, and most of those individuals don't have a process for working from home, and that's been a challenge.
Well, that's that just uh, solidifies my idea of keeping things local. Um, if technology went away, we'd still be able to do our work here at Cascade. So
You mentioned that your order count is still strong. I know that overall the Mortgage Bankers Association has said that purchase applications are down 30% year over year, and I think that's really that's nationwide, which is a little bit different in Oregon. So you're going to have harder hit markets like New York and Seattle for that matter. But it's good to hear that locally things keep moving.
yeah, I mean, we don't have the highs of Las Vegas or even Bend and the lows that they incur. We're more of a steady market here. And it's actually been, we're down, especially from where we were earlier this year. But overall, our order count's quite good, quite good.
Well, good.
Some people are concerned about online notaries, remote online notaries. Oregon still
Yeah.
does not have a statute authorizing remote online notaries. The law currently is the notary has to be at the same place at the same time as the signer. In effect, a face-to-face meeting. Remote online notaries, you do that over software similar to what we're talking about. We're viewing each other now. We are among the minority of states that have not yet adopted RON legislation. I know it's on the agenda for next legislative session, and if there's an emergency session called by Governor Brown, I've been told that a RON bill will be presented. So I think it's coming. It will enable people to sign from their homes if they're under quarantine or nervous or even out of the area. So it is coming. It's not here yet. If confronted with a RON situation currently, our underwriters have told us we have to put an exclusion from coverage in the title policy. So, at this point, from a practical basis, it's same time, same place for as far as the notary and the principals go.
Well, that's a good update. I know that we are kind of in the minority. I believe that 45 out of the 50 states have adopted RON. And I know a lot of lenders have that capability. I know we do here at Loan Depot and others where we're doing that in different states. But for right now, a lot of lenders are doing my version is hybrid e-closing, where they're having some of the documents signed, kind of like a loan application, where online before they get into closing. And that does reduce the time that's spent face to face, but it certainly doesn't eliminate it, which RON could do. But thank you for that update.
You bet. Yeah.
All right, Jeff, you want to talk about what's going on in your world and how the changes are impacting you?
Well, it's very similar to the last time we had this. I was looking at the boards while everybody was talking. There's 7 of us here, so I'm able to look at probably close to 100 orders between the appraisers that we have here, and it is almost exactly 50-50 split between purchases and refinances for what we're doing here. Still on our side, we're seeing a couple people that homeowners for refinances and a couple purchases. They're a little nervous. They might have had immunocompromised systems, so don't ask us to wear gloves or a mask. We all have the N95 masks and, of course, gloves and booties if people want. But for the most part, I would have to say that less than 3% of our borrowers or clients are really, to me anyway, and I'm just talking about when I'm in the field here and what we see, most people are just kind of over it. I think there was a hysteria at the beginning, and I'm not feeling or seeing that from these homeowners. I'm not trying to downplay anybody. I'm just saying that our particular area has not been hit. In Lane County, I think there's like maybe 40 cases, and out of 475,000 people, that's a really low amount that has shown up. So I think that some of the these borrowers again aren't really a big issue. Still finding a couple things that are interesting, which is when we get out and we do these inspections, FHA, conventional, we still have those options that you can do an exterior only, you can do a desktop appraisal or a full interior inspection. Some interesting things come to mind. We're starting to get a little bit of a tug of war on our side with lenders, which is Fannie Mae can say, hey, don't do that, but it is up to the appraiser to define the scope of work, meaning you may want an exterior only, but it is a position that, hey, there's too many things to look at. It doesn't give a reliable result, so we have to do a full appraisal. So that's up to the appraiser. Nationally, there's a lot of appraisers that are saying, I'm only doing exterior only. From the big three here, Duncan and Brown, McCarthy Associates, and of course us, we're all doing interior inspections. And speaking with those guys in the past week, they're reporting the same type of stuff that I am, that really nobody's doing a whole lot other than wash hands and keep the 6-foot barrier distance. So we're doing that. I've not seen
Hey, Jeff, this is Jared.
Yes.
One of the things that what are some things that might impact that? You know, on a purchase, you have good visuals because you have the MLS pictures and things like that. But the reality of it is, I think that it would be very hard for you to give value to upgrades and things like that when you're just viewing it from the exterior of their home. Which is great that hearing you're mainly doing interiors, but I'm just kind of wondering how that would impact things.
Oh, absolutely. So that's going to be, it depends on which type of listing you have, right? If you've done a lot of upgrades and and I can't see them, then I'm going to be on an exterior only. As a general rule, we're more apt to be more conservative on our market values, only because we can't see the inside. It's very hard to verify square footage if there's an attic or something that's finished off, garage. There might be additional shops, things that you can't see from the street. And basically, the guidelines are we are to see them from the street, meaning I'm not even supposed to walk around the back of the house looking at any structures on the exterior only. And so you have a part there where it does say, hey, you can use MLS photos. There's a change that just came out. There's a change that came out about. Can you hear me?
Thank you for doing what you're doing, your team, and going out and inspecting the homes. And I'm glad you're an essential worker and you're keeping the business going.
Yeah.
But any other parting thoughts before I kind of talk into the lending recap?
Oh, no. So again, all we're telling people is, as far as for realtors, when you have your sellers, is if they don't want us to touch anything, just have the lights on, doors open, we'll come in, minimal contact, and we'll be in and out pretty quickly. So that's pretty much what I would recommend for realtors if they have homeowners that are a little bit nervous about this whole thing.
Hey, so kind of going over to the lending market. So I wanted to kind of highlight some things we talked about at the end of last call. So the market in general, you have the jumbo market, which is loans above 510, 400, has really shifted and changed. So you have the independent space, which is really tough to do that product currently. You have even some of the big banks that have pulled out of correspondent lending. It's really kind of morphed and changed. So you have the largest, which is Wells Fargo, and Wells Fargo actually stopped doing jumbo loans unless you put $250,000 into their account, which is quite a large amount to make sure you have left over after closing. So kind of a big deal. And then the non-QM market, I'll call this the exotic market. And I did a little spin off of a Joe Exotic over here if you're watching mind-numbing TV on Netflix. The non-QM market, such as like the I-10 borrowers or the asset dissipation, or even loans that require like bank statements or debt service coverage on investment properties, that's pretty much all gone. You have maybe the private sector that's handling that now, but most lenders are having real challenges with that. The rate moves that we had through March, the good news is April has been a little more calming waters, where you have a little bit more stability in that, which is nice. I'm very happy about that because it makes a big difference in how we do things. So what you're seeing on that is the volatility is somewhat based on the Fed's buying mortgage-backed securities, which they were buying aggressively, and then they softened how much they're buying, so the market kind of stabilized, which is very helpful. very appreciative of that. But in the last 2 weeks, it's gotten a little bit better. So basically, there's just a huge gap between, lender to lender on what the rate market is now, whether you're a direct servicer, whether you are selling your loans on the wholesale market, or, just a retailer. So there's a big discrepancy between that. And I've even heard of, as much as a half a point difference in rate at any given lender. And generally speaking, the lenders in Lane County have a pretty tight amount where, maybe if someone's an eighth of a percent higher or lower on an interest rate, but you usually don't see the swings that we're having right now. So the signings that Amanda kind of talked about, most lenders are focused on switching to a hybrid e-close where they're signing some of the documents up front and then signing as little as possible at face-to-face. I think as Tom points out, if our state approves RON, which is remote online notary, I think that would solve for some things, but it's kind of unknown of when that can happen. Jeff talked really good about the appraisals. I think that's really specific to Lane County and the good group of appraisers we have here, where they're continuing to do work in areas that I'm familiar with. It's not the same. We really have a good group of appraisers doing that. A lot of appraisers are canceling orders or not being able to gain entry into properties in other markets. So I applaud them and Goshi's office and also Duncan Brown. One of the things that has happened is you probably heard of 4506T, which is a tax transcript. So if someone's using their tax returns to qualify for their loan, a lot of times lenders will verify that directly with the IRS. The IRS is also kind of on a smaller workforce and are having a hard time keeping up with that, and they've actually suspended that. So most lenders have removed the need to get a 4506T, but you certainly, if you're a realtor and you're working with your buyer or your seller, if someone is self-employed, you really want to dig into that a little bit because you're seeing where that might become an impact on your loans. So I know everyone's heard the term overlays, which was really popular in 2007 through 2010. Some people even probably have PTSD about changing things in overlays. But what overlays are is the agencies, so Fannie and Freddie and Ginnie Mae, which does FHA and VA and USDA loans, they have a set guidance. So like, we'll do these types of loans. And what lenders do is lenders, based on risk, they might set overlays based off of loans that have riskier characteristics. So some of those risks could be a borrower getting gift funds. It could be higher debt to income ratios, lower FICO scores, bond loans with like layering of risks. So most lenders have put some restrictions on that. So I would assume most, I don't know if every lender in Lane County has, but most lenders have upped their FICO scores. I know at Loan Depot on an FHA loan, we went to 620 FICO, where we used to do down to like 520. I know that sounds like it's restrictive, but really no one between 520 and 620 really qualifies anyway. So I don't know if it's that restrictive. Some lenders have gone up to 640. We're a little bit higher than that on our VA loans, but it's really important to work with loan professionals right now, and whether that's one of our loan officers at Loan Depot or wherever you're working with, because a good loan professional, if they don't have an option for that borrower, they're going to find another quality loan officer that can help them and get that customer to the finish line, which I think is really important. So income documentation, you're seeing some changes in that because, as everyone knows, the unemployment rate has kind of jumped up. So that means people are going to verify things a little closer to the finish line. So if you have a borrower that's getting requested for updated pay stubs, that's not uncommon. I know some lenders are even verifying employment up to the day that it funds. That's not necessarily required by the agencies now, but it's probably prudent because if someone does lose their employment, it's going to dramatically impact whether they qualify for a loan. And then the last part I want to talk about is forbearance. So forbearance, and we'll send this out to everyone that's on this call. But last week, a couple lenders in the local marketplace, I had Liddell from Guild, Chris from Fluent Mortgage, and Nick Carter from Director. So we put together this little website and also video to kind of talk about forbearance. I think that forbearance is something that the government acted pretty quickly and said, hey, we want to make sure that people have access if they can't make their mortgage payments. And the key to forbearance is people that can make their mortgage payments should, because we don't know the unintended consequences of what it looks like. I've heard people that just go online and they sign up for the free 3 months. Well, the reality of it is it's not free. And all it is deferring it. So instead of making your payment in April, May, and June, you could have a large payment due in August. So that payment due in August could be all 4 months of those payments, or maybe the lender will start the process where they might get into like a modification at that point, where maybe they spread the 3 months they didn't pay over a 6 month window or a 12-month window. But forbearances right now, for the right customer, I certainly support them. I think it's just very important that people understand that if you can make your payment, you should. During the forbearance process, it is not impacting your credit negatively, which is great. I think that the problem with that is what do they do after the forbearance period and when you're modifying or getting it paid back? That's not defined in the CARES Act, so we should be really kind of concerned about that. But I would, the video is about 9 minutes long. There's a link at the bottom there, tiny.cc/forbearance, but also we'll send it out to everyone. We'll update it. It also has links to your different FHA, VA, and Fannie and Freddie. But if you have questions on it, you should call your servicer. But the real problem is we're seeing where people are buying homes and then they decide that they're going to go into forbearance. That will absolutely crush our industry because you don't have from the people that are buying loans. So if you're doing a purchase loan and then someone immediately thereafter goes into forbearance, which is technically an act of default and says they can't make their payments, that's pretty scary to investors. And that will have a ripple effect on the marketplace. And you'll see that to your pricing of how lenders are doing that because they're just overall concerned on it. So again, it's changing every day. Yesterday, Ginnie Mae, which is again what I mentioned, the FHA, VA, and USDA, they've kind of propped up lenders because of if the consumer doesn't pay the lender still has to pay the investor. So I know this sounds like a large number, but the whole servicing industry made about $10 billion in profits last year, which is a lot of profit. Don't get me wrong. But if 25% of people went into forbearance for a period of 6 months and the servicers had to continue to make those payments to the investors, that would be $70 billion in payments. So you can see there's just not the capital to do that without the government kind of getting involved in it. And the government was the one that kind of set up the forbearance program to begin with and says everyone has to honor it. Again, I'm a big fan of forbearance if you can't make your payments. But it was kind of rolled out where, hey, it's free money. Everyone should do it. But it's not free. Whether you pay now or pay later, you're still paying. So I would encourage everyone to be on that and get some facts. So I saw there was a couple questions that popped up. I can't see the questions, Ben. If you could read them off to me, I'd be more than happy to address any questions we have.
Yeah, so first thing, guys, if you have a question you're thinking about, at the bottom there should be a little box with a question mark in it. You hit that guy, it'll open up the Q&A. The main question we had looks like already got addressed, but it's from Don York saying, we've heard different explanations of how a homeowner asking for some payment relief due to COVID-19. What is the best recommendation for people needing to do that? We know that forbearance is questionable. What's the best place for them to start, Jared?
Well, I think that website kind of explains it a little bit. And if people watch that video, we really put together something that's loan officer agnostic. So it's really not, my views or Liddell's views or Nick's or Chris's. It's really coming together as an industry to how can we serve and make people make informed decisions. But the next best thing would be after they view that and learn to talk to their servicer. Their servicer is who's going to set that up anyways. So I just want to make sure that people reach out to that. But servicers, to Amanda's point earlier about how it's harder to get payoffs, it's the same thing with servicing. So like all of our businesses, we're able to kind of adapt. But if you think about how loan servicing works, is everyone's in like a cube farm in a massive building. So it's a lot different on how they can react to those things. Well, I just want to thank Jeff, Amanda, and Tom for taking their time out of today and kind of educating us on this stuff. I think as a community, we can really band together and do a good job. If you want to follow our Facebook page, that's where the updates will be if we do anything. We'll also post this video there a little bit later. I think that I appreciate each and every person that's in this real estate world keeping the business going, because it's really important to the community that we're positive and stay calm during this. And we're going to figure out what solutions to every problem that we have. So thanks everyone for your time. Appreciate it.
You bet.